Hey, what's up everybody? This is Evan Carthy from evancarthy.com here, and today I'm going to go over the two intraday trading strategies you can use today. So what I'm going to show you real quick in this video is the 2-bar entry system, and then also the 123 to 161 Fibonacci extension trade. I just want to do a quick video real quick to show you exactly what I'm talking about, where you may be able to understand a little bit better than the pictures I used in the post. So what we're going to look at right now is we are going to look at oil right here, and so the first thing we're going to look at is for the 2-bar entry system. Now the 2-bar entry system, what it is, we'll zoom in a little bit right here. What it is basically is when you have a low bar like this one right here and you're looking to go long, what you're looking for is for the next bar, for instance, is for it to close higher than the last one. Now obviously that didn't happen right there, but then the third bar does. It just slightly ticks over. So technically what you're looking for, if you're looking for it in the most simplest form, you would like the very next bar outside the low to close above, you know, whatever wick it is up there. As you can see, it didn't quite, but the third bar did, so you still could use that one, and we'll go over that here in just a second. But like for this one right here, here's a perfect example of what it looks like. So price is going down, down, down. You're looking for something to close above it. That one came close, but it didn't. Going down, 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 down. There we go. Okay, you have a hammer form right here. That doesn't really matter, but then the next bar right here closes well above it. So what you would do is, I'm going to get this line right here, is you would put your entry right there. You'd put it right at the top of the inside bar, where the body is for it. So where that pink line is, that is where your entry would be. Now as you see right here, you wouldn't have gotten filled, obviously. The next bar just took way off, and then it just came straight back. So I wouldn't recommend trying to get back in at that entry level when it pulls back. If it goes away from you after it forms, then it is what it is. You missed it, no big deal. So we'll just keep on going down and looking for more entries right here. There's a low bar, no one ever goes high. Here's a low, nothing. There we go. That one closed slightly above it right there. So if you are just wanting to get in right there, obviously this wouldn't have been a winning trade. There would have been where you have your entry. That one closed. You know what? That's totally messed up. Never mind. Even I messed this up. So that one's not valid. None of these closed higher than this wick right here. I'm sorry about that. All right. So you have your low entry bar right here. Wait for some closing. There we go. There's one that closed above it, and then there would be the entry all the way back down here where that one is. So you have the third bar closing right there. You know, depending on how you have your setup right there, it could have been a loss if you have your exit right under there, your stop loss right over there, or if you have more to give, it could have hit it. But anyways, that's not the point. I'm just trying to show up in this video specifically the 2-bar entry system. Technically this wasn't a 2-bar entry system, and that is why I try to stick for the 2-bar, the very next bar closing above it. Since it didn't, then technically it would not be valid. But you can use, you know, 3 or more bars if you're looking like it, but this is normally the problem you have. You get that pullback the other way, and then just continues down and blows through that entry right there. So we'll keep on looking. Okay, there's one. Nope, that one didn't close above it. That one finally did up here. Sometimes it does work out perfectly, and this time it didn't. I mean, look at this right here. You have 1, 2, okay, well there's that one right there. So that would have been the entry right here. It would have stayed back down, been a nice profit. So I do not recommend you just using this blindly like what I'm showing you right here. What I do recommend using it for is in conjunction with like some Fibonacci extensions or retracements, and I'll put that in here in just a little bit. So here we have one right here. There's a low bar. There's the next one. It closed right above it. So then there would have been the entry right here. As you can see, it didn't come down to about right here to get you filled for it right there. But that would have been the entry right there. Because what you're looking for is when that next bar closes above it, you want the very next bar, third bar, to come back down, tick it, and then take off. Let's keep on going down. Nothing closing, nothing closing. Nope, doesn't close higher there. So we'll keep on going down. Okay, here's one right here. Here's a good example. Okay, so we have it going up, down, 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 down. There, that next one closed above it right there. So then the entry would have been at the top of the body of that red candle. Let me zoom in a little bit more. We've been at the top of that red candle right there. So as you can see, after that bar closed, we put the entry right there, top of the red candle, comes down, fills it perfectly, and then goes on and takes off. Now this chart right here, this is the crude chart, the CL, the oil chart, but that's a perfectly legitimate entry right there. So let's see. We'll look for one more here, and hopefully this has been helpful enough to where you understand where I'm going with right here. Okay, here's one right here. You can see you have a huge hammer bar right here. Let's put the entry on. So the entry would have been at the top of the body of that red candle, because there you have the next bar closed above it. You see that's the low. That bar closed above it right there. And I'll tell you what, let me take this, kind of annoying over here having the oh well, forget it. I was going to take the crosshairs off of it, but it is what it is. I'm not going to mess with it right now. Alright, so there's that bar closed above it. Next bar comes down, ticks it, and takes off right there. So that's a perfect kind of entry, and that's exactly what you're looking for right here. For that third bar to come down and tick that entry right there, take off and fill it. So hopefully that kind of gives you a better understanding of what you're looking for the 2-bar entry system. That's the technical term of it. I mean, as you can see, like right here, here's this bar right here. Let's zoom a little bit more, get rid of this ad right here. So there's that one. This bar obviously didn't close above that wick right there, that bar, but this bar did right here, closed above it right there. So if you are looking at making this more than a 2-bar entry system, you have your entry right here, price does come down and take it, and then takes off. So there are the pros and cons of it. If you are just doing blindly, which I wouldn't recommend, let me show you what it looks like if you're adding in some like Fibonacci retracements right here. So using this one right here, and let me put my Fibonacci's back on it so you can see what it all looks like here. Alrighty, so if you're looking for a retracement right here, you're going to start looking at the different retracement levels and seeing it. As you can see, we got some support down here at the 38% level, but price really never closed above it right here until right there. Well, if you're looking for the official 2-bar entry, this wouldn't be considered it. Price came down, gave some support down at the 61, but again, price didn't come up and get filled until right here. That would initiated it. And then all the way down here, here's one for instance where price, or excuse me, there's a low right there. Price didn't fulfill it till right there, but when it did, you have that right there, came down and take it, and then took off over there. So those are just one of the levels you can look at for different Fibonacci levels like that if you're looking for it. What you really want to use it for is like going in a direction, a specific direction, like looking at it right here, downtrend, downtrend. Now of course, looking at the whole right hand side over here, you don't know that price is going to continue to go down right there, but if you've done your chart analysis and you think price is going to go back down to the downside right there, and obviously it does right here, but going over here we don't know it, but if you do believe it does, then you start looking at the different Fibonacci retracement levels and looking for that 2-bar setup right here. So like right here, when price is hitting the 50% retracement level right here, there's the high bar, there's the very next middle bar, that red bar right there, that's the perfect entry. So you'd put your entry right at the bottom of that high bar right there at the body. Price doesn't come up and fill it though, but that is the type of entry you're looking for right there, incorporating that with Fibonacci retracement levels. So you can use moving averages, you can use Andrew's pitchforks, you can use, excuse me, whatever else you're looking for, looking what do the way you want to trade. There's no really right or wrong way for it. I just want to show that the 2-bar entry system, that is a way to getting into trades for trading. You can use it on any time frame, but for the purpose of this post, this is talking about intraday trading. Now what we're going to look at, we're going to look at the 123 to 161.8 trade that I talked about in that post. Now the first thing we have to look for when we're looking for it is that price must come back and retrace down to the 38% level. Let me go ahead and take some of these fibs off right here. So we're just going to use the ones for it real quick so I don't have too many fibs on there. Alright, let me take off that 23.8 because we don't need that one on there either. Where's that on here? There we go. Okay, so using this pivot low, this pivot high right here, price came down, hit 38%, so this is a valid trade right here. Now, price goes up, breaks out, hits the 1.236 Fibonacci extension level. I have them going both ways off of the chart right here, so this is going the negative way off of it, but this is the 1.236 Fibonacci extension level, so this is going to be your first entry right there. So when that happens, the exit we're looking for, I'll draw this box right here to show the entry and exit level, is going to be the bottom of the teal box, which is going to be the 0% line at $57.12. So as you can see, price goes up there and hits it, finally comes down and gets you out right there. Now personally, because this is a setup I do use a lot in my trading, it's one of my favorite trades I use. Personally, when I'm doing it, I don't have my exits right on the exit level line. I usually have them slightly above it if you're trying to get out of a short, and slightly below if you're trying to get out of a long. Just because I've seen price plenty of times barely tick down and hit that, say barely hit the $57.12 level, not enough to get you out of there because there's not enough trades being contracted then, but enough to complete the trade, but wouldn't enough to get you out. See, like right here, for instance, say like that, barely down, got it, took it out. That may not be enough to get you out of the trade if you had your exit right there. It probably would have been since it went down to 57.09, but let's say it didn't and it took off the other way. Well, technically this trade is over, but unfortunately you're still in it because you didn't get out of it. So that's why I always give up a few ticks, points, dollars, whatever, depending on what instrument I'm trading, just to ensure I get out of the trade and I book that profit in there. So that is one of the setups right there. I'm going to try to find one where price really goes off in another direction so you can see how the exits would get taken out. Okay, this is a good one right here. So here you have the pivot low using, pivot high we're using, price came down, hit the 38% level. So this is a valid setup right here that we're looking for a short side trade for the 161.8 trade. Price came up and hit the 1.236 extension level, so that it could be our first entry if you do want to get in right there for this trade. We'll say we did get in right there. We got in at the at that entry level, so that our exit is going to be down here at the 0% at 56.98. Now obviously look what happens, price goes up. So once price goes up and hits the 1.618% level, then we get in right there, and that moves our exit up to the 123.6% extension level, the orange line right there. But price continued to go up and hit the 200% Fibonacci extension level, so that is our next entry level, and this is the last time we move the exit level. So all exits will get moved up here to the 1.618% level, and that's the last time we move it. So even if price continued to go up, it hit the 2.236, 2.618, whatever, it doesn't matter. You can, get in short at these levels if you want to, as well, or any level for that matter up here, but the exit does not move right here, and I'll even draw a pink line from it right there. Does not move from that level, and price continues to go higher. So it didn't really go much higher, hit that level, came back down and took it out, within the same bar, a 15-minute time bar right there. Obviously there's some news that caused price of oil to skyrocket up in a short amount of time, but that's how it hit the 123, never retraced, hit the 0, hit the 1.618, never retraced, hit the 1.23, and then finally hit the 200, but it did retrace back and take that exit level. So even if price continued to go up, it doesn't matter, your exit still stays right here. You can get in at better levels. So the one thing you have to consider, which I'm not sure if I put that in post or not, is that, say, depending on, we'll just call it units, you're trading units starting in 1, 2, 3, they start at 1, and then 2 units, 3, 4, 5, 6, 7, 8, whatever. So if you get in one unit right here, you can get in one unit right here. This one will put you in profit, and this one will just pretty much cancel out, maybe for a slight loss or maybe break even, but overall you'll be in profit. But if you got in at the 1.236, 1.618, and price comes up and hits the 200, then what you have to do right here is you have to enter in at least 2 units. You have to double the amount of units that you got in at the 1.236 level right here. So otherwise, you're just either at best going to break even when price comes down here and get you out of it, or you're going to take a slight loss, depending on what your fees are for, getting you in and out of trades. And then if you do what I recommend for my advice, and get your exits out, just slightly above the hard target for it right there. That's why when I do this, I do whatever my first entry unit is right here at the 1.236. Always make sure I double it at this 200% level, just to make sure I'm going to be in profit for it. So hopefully these examples made sense for what I'm talking about. The first 2-bar entry system is just a way to enter into your trades. This one right here is a specific setup that I've created through meditating, which of course I recommend that everyone does. But this is one of the setups that I created that came from that I do use. Hopefully you can utilize it. If it doesn't work for you, hey, no big deal at all. That's what trading is about, finding out what works for you, what doesn't work. It's all about trial and error, so you can create your own system that works for you and you can become profitable. All right, hope that helps. If you have any questions, want to see anything, let me know how I can help, and have a great one out there. Take care. Bye.